Today is Tuesday, December the 6th. Time right now in Singapore is 12:36 in the afternoon. And overnight, we can see that the Wall Street actually also continue its retracement from last Friday's activity. Overnight, we can see that the Dow Jones has actually traded to a low of 33,846.8, based on the report that the ISM, the services PMI, actually saw a marked improvement. The market was expecting 53.1, but the market released for 56.5. Now, remember last week there was a report on the same ISM manufacturing PMI, which is the Purchasers Managers Index, was actually below 50, which is actually contracting. Okay, so that caused the market to actually expect the Federal Reserve to now slow down the rate of ascent. Okay, in this rate tightening cycle. But last night we can see that the service sector, based on the report from last night's services PMI, which was very much better than market expected, shows that the service sector in the US economy is still expanding. So that complicates the narrative about the upcoming FOMC meeting on December the 14th, that the Federal Reserve will actually slow down the rate of rate hikes, okay, from 75 basis points maybe down to 50 basis points. Now, this report actually throw a spanner into the wheel, because this complicate matters, because it's still showing the US services sector is still expanding and is very healthy. So we cannot say that because the US economy is slowing down, therefore the Federal Reserve will have to take its foot off the pedal. But because while the manufacturing is contracting, the services sector seems to be expanding. So now the question is, we are not sure whether come December the 14th, whether the Federal Reserve will actually slow down the rate of the rate hikes to 50 basis points, or will continue to still charge ahead with 75 basis points. That's a reason why the Dow Jones actually, US equity last night actually started to decline. Okay, and not only that, it also caused the dollar to rally quite significantly. Okay, although the dollar index came down, but the other currency pairs, especially dollar versus the yen, dollar versus the Canadian dollars, all saw very, very sharp recovery. So later on we'll come on to that. So by and large, you can still see that this market is still doing a three-wave corrective. There's still no saying that this market has already peaked just under 35,000. There is still a possibility after the market consolidate for a while, it may still continue to want to go, because like I said, we are into that window dressing period, okay, especially next week, just before the Christmas season. So there is this tendency for asset manager to actually wanting to push the market higher, so they can get a higher valuation for their portfolio, because all their bonuses are based on performances. So there is still the possibility of a Santa Claus rally. So for the time being, we just take it that this pullback from just under 35,000 in the Dow Jones is a corrective pullback. Okay, there's still that possibility. Okay, in the S&P 500. In the S&P 500, you can find the market also pull back in a three-wave decline. So the main thing is that this near-term support line is still intact. So that's still built onto the narrative that we may not have seen the top for this run. Okay, but that being said, the upside potential is getting smaller and smaller and smaller. So be very careful. What if the market has already topped up at 4,100 in the S&P 500, and if the short-term support line is taken out, then it could mean something altogether. Okay, but we still keep an open mind. If the market do rally beyond 4,100, there is still a possibility. But remember, this is a target range. You can see that based on the daily time frame, you can see my target range has always been no change at 4,118 to 4,232. So we are very, very, very close. Okay, so this is a three-wave, a larger degree rebound. So we are getting very close to a top. If not, the top may already be in place. So be very, very careful chasing this market ever higher. Okay, over in the Nasdaq 100, we are seeing similar pattern. Okay, although the rally to the top side still have a bit more way to go before I hit my target at 12,640. So far the high traded is 12,115, which is traded last week. Okay, on last Thursday, this is the high. So we can see the yesterday pullback it completed a very simple three-way pullback, but still respecting the near-term support line here. So we will have to use this as a cue. Okay, over in Asia, we have very positive movement in the Hang Seng. The Hang Seng actually rallied up to almost 19,600. Of course, uh, the fact that Wall Street actually pulled back did not influence negatively Asian equities movement because of the other news that's also in the market, because China is relaxing its zero COVID policy. There's a lot of talk that China is going to slowly loosen the very strict adherence to the zero COVID policy, and this is very much welcomed by the market participants. They see it as a very bullish news, so that basically override the counter news from last night, the services PMI that caused the Wall Street to actually pull back and the dollar to rally. So this is market is sustaining based on the idea that slowly, but we hope to see China continue to loosen its zero COVID policy. So the same news also excited the Shanghai Composite Index. We saw the index went up to a high of 3,224. Now this is again very close to my target price of 3,226 to 3,281. So this is a three-wave rebound. So be very careful chasing this market ever higher. So once a market goes into this bracket of price, and if Wall Street does not continue to rally, this could be meaning that this zone of prices could be in danger of attracting a lot of selling interest. People may want to take profit, okay, for example. So over in the Nikkei 225, the news was not so positive. They still basically follow the Wall Street narrative. Wall Street came down yesterday. The market actually hit this bracket of prices. It's a three-wave pullback. But the different thing is that it has broken this support line. Now this support line has become a resistance line. So there is a possibility after market do a three-way pullback, it may stabilize around here and then started to rally. But the question here to watch out is, will the price be able to go back into above this, now the resistance, the support and resistance line? Okay, so we have to watch this. Again, top side is quite limited. Be very careful chasing this market ever higher. Over in currency, I mentioned earlier on that the dollar also rallied based on the services PMI numbers that was released last night. So the market actually went up to 137.17 this morning. So this is a very much improved position from the low of 133.62. So you can say that this market so far is a three-wave. It hit my target. My target was 137.13. Okay, so it actually exceeded my price by just about 4 ticks before it seems to be coming under profit taking. So we will have to see how this market turns out. If the market continue to edge higher, obviously the market is going to gun for 140, which is this high over here. So do watch out for the possibility of extended dollar rally. Okay. Going into this month, I was actually of the idea that maybe I want to close my book for the year because I'm going to be traveling next week. So, but the price was just too good. Yesterday, when the market hit a high in the sterling at 123.44, and then accompanied by this reversal pattern, okay, a very small one on the 60 minutes. You can see this is a outside bar. Okay, so the moment I saw this outside bar, the next bar I went in to sell. Okay, so that was like giving me actually a key reversal sign. Okay, allowing me to sell almost near the top. Okay, and the market went down to 121.62 this early this morning before we see a bit of a rebound. I do want to keep this position for a bit longer because I think the market can come to 121. Okay, so I want to keep it for a while and see how the market develops from here onwards. Okay, I also went short in the euro versus the dollar. The same time when the sterling peak, it was around here, and I was conflicted because I also saw a signal that maybe may actually be worth my while to actually go short. But because these two currency pair are positively correlated, meaning to say they move in the same direction. If I already shorted one, to short another one means I would having double position. So I hesitated for a while and the market went down. So I decided not to chase. So good thing I didn't do, because at 3 o'clock in the afternoon, the market actually rallied back to a new high to just under 106. And this is the where I actually decided I want to get it. Okay, because 106 is a much better level. Then within here, you can see this is an inside bar. What I saw was in the sterling was an outside bar, but in the euro versus the dollar, there was an inside bar, and I went into short on the the break of this low here. So I actually went short on euro dollar as well. But right now, both positions are already risk-free because I moved all my stock to break-even price. So these are risk-free trade. I will just want to hang on for as long as I can. I think there's a possibility market may come down to 102 or 103, 102. Okay, I think I will take profit at 103. Okay, so I will have to see how the market reacts, especially if it breaks the near-term support line here. Okay, I want to see how far it can go. Over in okay, this morning we have interest rate decision by the Reserve Bank of Australia. Market last night fell from just under 69 cents all the way down to 66 just under 67 cents, and then you saw the rebound. And then this morning the RBA, which is the Reserve Bank of Australia, actually high interest rates, so it was within expectation, so the market actually rebound a little bit. So we will see whether this will result in an extended fall going forward, because if the dollar is going to remain strong, that means despite the interest rate hike by the Reserve Bank of Australia, there's a possibility it may see lower price going forward. Okay, the one that actually was very obvious, okay, when we look at dollar strength, was this dollar versus the Canadian dollars. So this move from 1.3385, okay, go all the way to 136. This is a very sharp move. I did not have any position because I was already long the dollar via the short sterling and short euro dollar position. So I have no more incentive to go in and long euro dollar versus Canadian dollars. But this was where the market was very sharp. Okay, much sharper than the fall in the sterling as well as the euro. So the market looks like the dollar has already bottomed out, and the risk is the market will continue to edge higher. Okay, over in crude oil itself, crude oil also came down very sharply because the dollar actually rallied. Okay, and then of course yesterday was the first day after the G7, which essentially means the European Union has actually stopped or rather banned the import of Russian energy products. Okay, and they also imposed a cap on Russia crude oil, okay, to $60 per barrel. So yesterday was the first day of the action, and the market was trying to see how to react. Initially, the market did not react, but then after the market went down from $82.72 all the way to $76.77. Now, it was around here that I remember going into yesterday's session, I was mentioning if crude oil can come down to a more sensible level, okay, anything below $78 per barrel, it becomes very attractive. So this is what I did. I went into to buy crude oil. So I have two long positions that I'm holding on right now. Hopefully it doesn't go all the way down. So I want to see whether it can hold, because the market actually pulls back 3 waves and hit the 1.618. So normally 1.618 is not a very healthy retracement level. I would have loved to see the market stop at 100%. Okay, but the market went even deeper. So we want to see, because it is a key Fibonacci level. So the market held at $76.77. I was not surprised at all. So now I want to see from here onwards, can the market actually rally? Okay, so the market is trying to digest how to price crude oil if there's going to be a sanction on Russian oil export at $60 per barrel. Okay, we will have to watch, because nobody has ever seen a sanction putting an artificial cap on a major exporter of crude oil. So we will have to watch, not knowing what the market will do. Okay, so obviously the market have decided there's a bearish news, and of course, if China zero COVID policy is slackened, the natural understanding is that China is opening up again, and hopefully business activity will pick up, and then there will be more demand for energy products. So let's see whether this slow opening up of the Chinese economy via the relaxation of the zero COVID policy can help crude oil prices. But basically right now, I'm really long crude oil. Yesterday, over in the precious metal market, we also saw a very sharp move from $1,810 all the way down to $1,764.70. So this is a very sharp move. But earlier on, going into yesterday's trading, remember I was saying that the gold price has already hit my target. My target was originally $1,802 to $1,846. So the market went up to a high of $1,810. So to me, this is a 3-wave rally. and it has already hit my target. So the risk of the market coming under profit taking is of course very, very high. So of course I didn't dare to sell it because I've been telling you guys the market is very, very tight in the physical market, and there's possibility people are these speculators are shifting their focus to the COMEX market, in which they want to hold their contract all the way to expiration and then demand delivery. So this is exactly happening in the silver market, because the silver market is so tight, okay? And we can see that there's a lot of trading activity going into November 27 delivery. We already saw a spike in the delivery commitment. So we can see that there is a demand for silver especially. So that spill over in the in the gold market. Okay, so I have also gone long on the gold last night. I placed two orders. One order was filled. The order theoretically should be filled, but I didn't get a fill. So basically, I have no choice. I bought just above current current level, okay, at $1,770 thereabout, and the other order at 1,765 should be done, but it was not filled. So I'm holding on to the other limit order. So from here onwards, I'm hoping to see that the market can actually stabilize and maybe go back above to for a new pattern to develop. Okay. Over in the silver market, we can see that the market also have a major pullback from $23.52 all the way down to $22.17. The market stabilized, but the rebound was very, very sharp. I mean, on a comparative basis, it was sharper than the rebound in the gold market. So we can see that the market really is in the silver market. So if you have a chance to go into precious metal, my thinking is that I would rather hold on to silver rather than hold on to gold. But I have not been able to get into a good position in silver, so I will have to see, you know, if I can't get into silver, then maybe I'll just hang on to my gold position. But if I can get into a silver trade at a good price, maybe I want to hold it. Okay. Over in crypto, the market actually has a pullback. The high traded in the Bitcoin was 17,425 on yesterday, and then you can see the market actually took out the near-term support line, went up to as low as $16,874.90 this morning. And the fact that it has taken out this near-term support is not a good sign. Like I say, this is like a red flag. The market take out this near-term support line doesn't mean the market is over. Just the fact that it has taken in a support line is definitely not a good development. So the market now is trying to rebound. Let's see whether it can rebound back into this this line over here. So we have to watch on. But when we look at the daily time frame, okay, I've mentioned the fact that this is a three-wave rally. This is a three-wave rally, and then it went into my target range of 17,300 to 17,657. So the market went up to a high of 17,425. This again telling me the market is in my target zone, and the risk of the market hitting its target and then starting to come under profit taking is very, very high. So the market yesterday pullback was no surprise to me. But when we look at the 60-minute, we can see that this near-term break of this support line now cause the market to have a little bit of a bias to the downside. So be very careful chasing this market ever higher. I would be more comfortable selling this Bitcoin, because on the downside in the medium term, you can see that the downside target is at the minimum 12,000. Okay, so right now we are 15,000, 17,000. So there's quite a bit of a move to the potential to the downside. Okay. And not only in Bitcoin, we also see the same thing happening in Ethereum. Ethereum also broke a near-term support line. Okay, market went up to a high of 1,705. Previously, last week, we can see market high was 1,308. The market couldn't go back to this level and then came under selling pressure, and it took out the support line. And then when we look at the daily time frame, we can also see that this is also within my target range. It is a three-wave rally, and my target was $1,307. Market went up to a high of 1,310. So basically, when we look at it in this perspective, the top side was very, very limited, and the risk of coming under profit taking is very high. And this is exactly what happened last night. The market came down and take out a near-term support line, and this caused the market right now to have a little bit of bearish bias. So be very, very careful. Okay. Ripple has been trading in a consolidated pattern for quite some time. You can see this pattern that I mentioned looks like a triangle, and I did mention that at some point the market will have to break out. Obviously, it looks like a triangle, but it's not a triangle, classical triangle pattern, because a classical triangle pattern means I will have to redraw this line and reposition this support line and still say that, okay, this is still within the triangle scenario. So if this is the case, this could possibly be A, B, C, D, then E before the market break out to the upside. So again, this is getting to be very complicated to trade, because if the market goes into a triangle, the trading range will continue to compress and compress and compress. So it becomes very little incentive to get into a position until we have the E leg in place. Okay, then that's where the market will be preparing for an explosive breakout. Okay, so if the count is correct, we will see how the market develop. It could all turn out to be a flag for all I know. Okay, but for the time being, I will treat this as a potential triangle. So do watch out. But for the time being, if you can avoid Ripple for the time being, just avoid it for a while, because it is going to compress for a little bit while longer. Okay. Binance coin does not have a major move last night. When you compare this to the other coins, you can find that the trading range in Binance coin is actually quite limited. The market did not take out the most recent low at $285, which is a good sign, because last night low was $286.10. So basically, the market do not have a lot of selling interest within this market, although it does look bearish. Okay, so we will have to see what kind of pattern it develops over time. Dogecoin actually surprised me, because Dogecoin, while the other coins were not able to make new highs, Dogecoin were actually on a relative basis managed to edge higher to 0.1119, which is quite a bit of surprise, because this is one of the coin that actually managed to register a high yesterday. And again, while the other coins were coming under profit taking, it was inevitable that the Dogecoin also came under profit taking thereafter and broke the near-term support line, went up to as low as 0.0993. So we have to watch what happens after this now. Okay, so this is all I have for you for today. I will see you again tomorrow. Bye bye.